In this video, we're going to check out the top stock picks for this Monday's market open. We're going to touch on the S&P 500, the different sectors, where they are year to date, and what it looks like for next week and the months ahead. We're going to touch on the economic news, the fear and greed index. And guys, the fear and greed index is still, I believe, in the 60s. So we're still kind of in greed mode. So we just reached 6,000 for the first time in months. So is it time to take some off the board? We're going to cover that in this video. We're going to break down the top and best setups in the stocks and options in this video. So stay tuned and watch to the end. Should be a fun video for you here today. One thing I ask, one thing only, smash that like button down below. That's all I ask. If you would like, you're welcome to subscribe as well. We're at all-time highs, and I appreciate each and every one of you. So thank you very much, and let's get into it. Last week in the financial sector, U.S. stocks ended the week on a mixed note. The S&P 500 was pretty flat, and the NASDAQ was up, reflecting uncertainty in the market. Now, the Treasury yields and the 10-year is about at 4.4%, and the Fed funds rate is 4.33%. So that's the effective Fed funds rate last week. Now, through the week, tariffs seem to be easing, and volatility is coming and remains high. The growth is slowing, so there's still uncertainty in the markets. Let me know in the comments down below what you think as far as the next few months and volatility. Is it going to go up, or are these tariff situations going to get resolved? And are there deals to be made? And is the market going to take off and skyrocket? Well, I think it's coming, but it may take a little bit of time. All right, guys. So this is the last 5 days on sectorspiders.com, and you can see the different sectors and how they perform. Consumer staples was down 1%. But you can see pretty much everything else, with technology leading the way, was up last week. So technology was up 3.23%. So yes, AI stocks coming back. And I think they're ready to take off. So that was a really good week for the AI stocks and a lot of the plays that we have on. Now, if we look at year to date, technology is now up 2.5%. It was down much more. It was down earlier in the year. Now, financials were up 6% right now, so they're moving pretty well. And consumer discretionary, with the worries about inflation, is down a little. As far as interest rates, we're at 4.25 to 4.5 right now on the Fed funds rate, and Powell and Trump are going at it, right? So in July, we're still expected no cut. With inflation, still the Fed's main job is to keep inflation in check. And we've got some key numbers here I'm going to shoot to that are coming out this week. But the 4.25 and 4.5 is expected to stay that way in July. And the first cut that's expected is a 0.25 point in September, and then to stay at that 4 to 4.25 at the next meeting in October, and then one more in December. So there's two rate cuts set to cut in, predicted by the CME group for this year. So it all likely depends on the numbers that come out. And we've got a couple of big numbers this week that I think inflation's in check, so I think we're going to be okay. But the core CPI numbers coming out Wednesday. Expectation is 0.3%. So if we come in under that, that means inflation's in check. If we come in over that, it may be good for the market, because then the Fed is likely to cut rates earlier, and that could send the market higher. So, it just kind of all depends. The PPI numbers are coming out Thursday. 0.2 is expected. So let's jump into the live trades. We've got some good ones this week. Let's see. The first one that I've got, it's a new one. I don't really like to trade this one, but it's down so much. And the reason I don't like to trade it is because it's not super liquid. Even though there's 2.15 million shares traded, it's still the spreads between the options are pretty high. But hey, I did it anyway. It's down so much. If we look at the chart here, and this is the Tastytrade platform, guys. So it's great. There's a link down below, and there's some benefits if you go through my link. But it's my favorite platform, and it's got some great features. But you can see Adobe's been trending down, and now it's trending up just recently this month, and the 50-day is getting ready to cross the 200. So we've got the Bollinger Bands in the white, and you can see now it's kind of up. So in the short term, it's a little oversold because it's had this big run up. But overall, I think we've hit a bottom. It's at 416 and 69 right now. And what I've got on is the 405, 395. Now this is one of the, and this is a put credit spread. So I've got right here $700. If we stay above that in the next 12 days, 2 weeks, I keep the $700 that I collected when I put this trade on. And I've got two tranches here. A tranche is basically, you can be a single option trader, or a dual, a triple, or you could trade 10 tranches. So you want to stay small if you're learning, but I like to scale in and scale out, dollar cost average. So if we go here, if we click on Adobe, this is, my goodness, this is what I love about this platform. We can go to curve mode and analysis, and then you can see the profit zone. As long as we stay above that, we keep this max profit. You can see P&L at expiration, $702. And our max loss is going to be the $10 wide minus what we collected up front. So the max loss is $12.98 because we've got two contracts on. But I'm not worried at all about Adobe, and I will show you why. This is what we do a little bit different than everybody else, is the tracker. So let me show you. I'll pull it over. This is my cheat sheet, so I can't leave it over here. But Adobe, 416 price, IVR. Now here's the 9 items that I track. So the 50 over the 200, which I just showed, the technicals, support and resistance, and I've got those numbers in here, 345 support, resistance at 450. So that's good because we're at 416. So we've got some room to move up. Oversold in the short term on the Bollinger. The fundamentals, super strong. They've got a 20 PE, 1.3 PEG, price to earnings to grow. So they've got big growth, 12%. That's huge for a company that's this big and a market cap this big. Overall in the market, we're at 63. We're up in the fear and greed index. Let me go back to that, 63 greed. So I want to have money on the sidelines when we're here because we just had to move up. The 12-month range, 332 to 587, and I get that right off Yahoo Finance. It tells you the 12-month range. So what I like about that is since we're at 416, we've got that big room to move up to 587 to the previous highs. The earnings, I track that. That's a positive for this stock as well. 3 beats the last 3 quarters, and the analysts have it as a buy right now. So that bodes well for it moving ahead. Now, my target price is 500. We're at 416 right now. I'm not going to do this, guys, on every one. We're going to speed through the others. And here's my notes. I've got long-term and then in the short term. Long-term, they've acquired companies. They've done it in the past, and they've got huge earning per share growth. And Microsoft and Intuitive are comps, and Adobe has a PE of 20 so versus those guys that are 30 and 40. So it's at a discount. It's a great buy right now. And with AI and 30,000 employees, they should be able to drop that over the next 5 to 10 years. I hate to tell you guys, but with AI, the jobs are going to be lost. But people are just going to move into other jobs. But as far as the photo and video editing space, Adobe's it. They're all the great creators and the graphic designers. I mean, they use Photoshop, and they're going to do that going forward. For the next, couple decades at least. I don't know what can replace it. They've got such a market dominance in the space. So I can sleep well with Adobe. I've got the put spreads on. If for some reason it gets tested, which I don't think it will, then I just roll the next month and collect more premium. That's what I love about options. And if you guys want to get that free options workshop, watch the video. I'm updating my course, and if you get in now, it's at a lower price, and you're in there for life. So as I update it, you'll get the new next version just completely you're in, but it's going to be more expensive. So check that out. And then I've got the 2 put spreads, and this is in the short term. Can't drop much more. Screaming buy, undervalued, super cheap, great time to buy. Okay, let me get my notes back over here. All right, let's go back to the stock. So that's Adobe. We're not going to take this long on every one. I'm just going to speed through them now. So stick with me, and we'll go through. Hopefully we can get this done in the next 10 minutes. Hopefully 5 minutes. Okay. AMD, screaming buy. I've got 3 leaps options. I've got videos on leaps if you're not familiar with them, but 3 110 leaps. You can see it's down. Now the 50 is getting ready to come up on the 200. I love the setup here. They've got immense upside coming in the next 5 years. Them and NVIDIA are the AI chip leaders, but these guys have the MI350 and the MI400 coming out. MI350 this year, MI400 next year. Their fundamentals are unbelievable. They beat earnings the last 3 times. They've got a PE of 27, PEG of 3.5, but 50% gross profit. And they're going to continue to grow in the years ahead. I told you I'd go quick on this. Okay. ANET. This is a new one. Arista Networks. New trade for us. I've got a put spread on at 95. Love the setup. 50 coming up on the 200 and down below the previous highs. And let me just see. And again, all these stocks that I'm trading, the fundamentals are incredible. So I'm going to focus more on the reasoning a little bit. But the data center build out with AI, these guys are the leaders. They do the chips, the switching chips, and they were down last week here, this drop, just because NVIDIA announced they're coming out with switching chips as well. But that's not their specialty. They're not going to chip too much, if any, into Arista Networks. These guys are the leaders, and they're used in all the data centers. So love it here, and my target's much higher. All right, let's see what we got next on the list here. Okay. Guys, if you have, as I'm going through these, I'm only going through the ones that I think are screaming buys right now. But if you see one and you want me to talk about it, let me know in the comments below. Comments help. They help more views for the channel, and the longer you guys watch and stay on and watch to the end, that helps as well. So I really appreciate it. Google, I've got a leaps and then a put credit spread, and we're at 173. These guys are dominant, monster in AI. YouTube is spectacular, and I'm very familiar with it. That's what I use now. And they received $20 billion, Apple did, from Google for their agreement with Safari. And there's talks, and I got to follow up and see what happened with that. But whether they renew that agreement, I actually think that if they don't, I think that's better. The $20 billion that they pay Apple is can be used for other things. And they've got Android, Waymo, YouTube, Gemini, Cloud. Kathy Woods sees this as still disrupting going forward. And it's going to be good over the next decade for sure. And you can see similar chart pattern. We're coming up 50 on the 200. I think there's huge upside from here. GitLab. Okay, this is the one that is a new trade that I've got a poor man's covered call. So that's a deep in the money leaps. And I've sold a 52.5, a call out of the money against it. And again, when you do a leaps, guys, let me just show you. So instead of spending 48 times 100 shares, you can buy that for like 20% of that price and control the same 100 shares with the leaps. So here's how you do it. You go to March 285, and I've got for $1,580 versus $48.77, because one option contract controls 100 shares. We can buy, calls are on the left, and then the buy is right here. We can buy that $1,580, mid price $1,535. Now watch this in curve mode. Boom. And then boom. Just like owning the 100 shares, as it goes up, it's unlimited, and you make money as the stock goes up. If it goes up to 60, you make at expiration $1,372. So you almost make 100% on your money, $1,535. Now here's the other thing that is wonderful about Leaps is you can do a poor man's cover call. And anytime I buy, I do, because I want to make money on both sides of the market. So I'll go to the July. These are the weeklies. I'm going to close those out. You can do that right here on the Tasty Trade platform. Let me know if you guys want me to do a review of the platform. I haven't done one in a while. I think I've gotten a couple of comments on that, but I'm going to go ahead and probably do a breakdown of the Tasty Trade platform and some of the benefits of using it. So you go to July, 40 days out, and we'll sell a short-term call against our long-term Leaps. So this is out almost a year, 285 days, but we can sell now the July, like I did right here, 52.5 and collect 295. So how much is that? Times 100 shares, that's $295. I'll click on that to sell it and watch this come down by $300. 1535, 1232. We could hit review and send and place that trade. And if we do 300 and we collect that every month, this is paid off in 4 months. So in under 6 months, you can control 100 shares of stock for free. That's the beauty of options. So GitLab, I'm going to do a breakdown, deep dive video is my plan. Let me know if you guys confirm with that. But look at the fundamentals. Incredible. This is quarterly. This is annually. But revenue increasing, net income increasing, assets and liabilities all increasing. I think their margins are, 88% margins. So that tells me they're online. About GitLab. They provide dev security ops platforms, AI, all screaming industries, a single application that brings together development operations, information technology, security, and business teams. So you can read about it, but they're in the cloud. They're also on premise. So it looks like a screamer. Great setup with they've hit. There's a double bottom, so patterns in that free option workshop, you'll learn about that too, but chart patterns. So we take into account everything, not just fundamentals, but the charts too. Here's a double bottom setup in the 50, getting ready to break out above the 200. So beautiful chart as well, but love this long term. All right, GitLab. Let's see what I got next. There's some great buys this week. All right, Lilly. So I'm not all tech and AI. I like to have, I guess it's kind of following Jim Cramer's thing where, are you diversified? And he's got 5 different sectors. I'm mostly in AI because I see right now it's going to scream for the next decade. But it's good to have some other sectors on. So when the AI gets hit and Trump tweets and some news comes out, that we've got some other things on, because typically, if we go to war, I think, or if China attacks Taiwan, that might affect the whole market. Everything goes down. So that's a reason to stay small, have money on the sidelines, don't have everything, especially if you're using options because they're leveraged. You want to have money on the sidelines, especially when these greed levels right now are in the 60s. So with Lilly, I've got a 730, 720 put credit spread. I've got 2 of them on. And then if we go to curve mode, you can see right here, as long as we stay above that, we keep that money. And we've only got, we've got 40 days because I did roll, but $630 to collect in premium in the next 40 days. That's not bad for, 2 options contracts. So Lilly Pharmaceutical, huge pipeline, and what do I have to say in my notes on strong drug stock, diabetes and weight management, huge pipeline. Dave Ricks is a great CEO. Q1 missed, but he owned up to it, which I like. And he said that it was not operational cost. It was more investments in equity securities. So I'm not sure why they're I guess all companies do that. They invest in equity securities. But they were down big on the day, so I put on another put spread. But love Eli Lilly going forward. And let's see what else. I told you I was going to go quick through these, and I'm not going as quick as I'd like. Nike is another one. I don't normally trade this, but the chart set up, and I've seen a lot of news about them recently. And they've got a dividend as well. But they're getting some things straight. So you can see they're trending down. You're going to go, hey, Darren, why are you buying a stock that's trending down? But that's where I'll tell you why right here. It goes back again to my tracker. And looky here. All right, Nike. Oh, I didn't put them all, but The chart's kind of neutral. So black, neutral, I put it in neutral. 55 to 68, it's a 62 now. So I've got that in green. So that's a good one. So on my 9 things that I track, that's green. That's good. Green is good. Red, yeah, the PE is a little bit high, PEG. 2.5% growth is a little bit low, but there's other factors to consider. 52 to 98. So this has got huge upside. 62 to 98, that's big upside. 3 beats and a buy. So they beat the last 3 quarters. The target price that not only me, but Yahoo Finance has 75. So from 62, that's a huge upside. So it can really move up. And then here's my notes. Wow. Why? Okay, previous CEO from consulting company only ran the numbers and the stock tanked. So I guess the previous CEO didn't do a good job. Not everyone wants to order online. I don't think tariffs, because they do everything in China, that probably didn't help. But some people want to go to the malls and, Foot Locker and Dick's. And Dick's is doing well. I don't know about Foot Locker. I'm going to have to take a look at that. I've never really bought shoes at Foot Locker. Unbelievably, Nike is down, and they're now going onto Amazon. That's going to help the revenue immensely. 2025 revenue growth back in going into 2026, there should be double-digit margin and earnings per share growth. That should get to 5 to 9%, so that's going to go up big. Revenue growth, 10% earnings per share growth. And the stock's going to get back to 100 and then 150, plus there's a dividend. So, and again, this diversifies as well. I don't have a retail. I've got a bunch of AI. So kind of love that. All right, let me get my tracker out of here. All righty. What's next on my list? Yeah, and those are put spreads. Those are leaps with poor man's covered calls. I love that strategy. All right. PayPal. Palantir. I mean, Palantir is a core position, but I'm not covering that because look, it's at highs right now. So I'm not going to tell you to get into that right now. But we'll make money on these 3 calls, $700. So we make money in both directions. Right here, we'll make money on the one call, the 135, and you can see $700 we're going to make as it pulls back. All right, PayPal. I've got 3 tranches on, so that tells me I believe it's going up, and you can see that 50 crossing the 200. Love it. Let me see what my notes. The CEO is cutting unprofitable profits. Great fundamentals. It's too cheap right now. They're doing crypto now as well, which the Trump administration loves, and it's going to boom there. You can sell a leap and collect $100 a month on these leaps to pay that off. Like I said, it looks like for PayPal it's going to be a little bit more than 6 months, but there's other. I love the strategy. But Amazon's huge, so they've got a partnership with Amazon. So when you order something through Amazon, you're most likely using PayPal to pay. So love these guys moving forward. Reddit's the next one. So between GitLab and Reddit, let me know which one you want me to do a deep dive on, because they're both new and I've got to learn more about them as well. So if you guys know something, let me know in the comments below about both these and if you like them. But the put credit spread 105 to 95. And they're starting to cut some big deals. So, I'm sure they're learning how to monetize better with ads. And I haven't been on Reddit or used it much. My kids do. Oh, well, actually, my son does. He was like into gaming. Now he's in the Navy. But Reddit, a lot of people go to, and it's growing. It's integral to the chat boxes that many people use. So that's interesting as well. But I've got a put credit spread, and again, love that setup and fundamentals. I think they're strong. Look at this. Annual, because they're an online business. So, I mean, there's not a lot of overhead, but the revenue and net income every year is growing. The balance sheet, super strong assets, liabilities. I bet you the profit margin's huge because they're online. 90%, yeah, it's okay. Yeah, unbelievable. But it seems like a great platform. So I need to do a deep dive into that. All right, Reddit. Let's get through these. SoFi. Love SoFi. I think it should be much higher. Fintech. Great flag pattern, chart patterns. The 50 broke above the 200, huge bullish sign. I think it's going up from here. They've consistently beat earnings, I think, the last several quarters. I can look on my little cheat sheet. Yep, 3 quarters beat. And PE is 39, a little bit high, but not for, they shouldn't be priced like a bank. They should be priced like a fintech. And they've got things that, Wells Fargo, although I like Wells Fargo too, I got to look at that. But I think they just got some money or some penalties that are going away that's going to allow them to skyrocket. So this week I'm going to look at Wells Fargo as well. Actually, yeah, I'm not going to jump to it. But SoFi is great, moving ahead. And yeah, I've got lots of tranches. I've got leaps, and then I sell calls against them. And my calls are being tested. But until it hits that 14, which 14 it did on these 3, I got to roll those out or roll them up. So I will go ahead and roll those up. I'm going to show you how to do it right here. You click on it, and this is Tasty Trade again. We can go roll strikes up, and then point. So we're going to pay $43 to roll it up $1. So yeah, I'm paying this, but I can get $1 in upside on as the stock moves up. There we go. So that's better than the 43 cents I'm paying. I'm making $57 as it moves up. So I will put this on good till close, and I'll actually put it below, or I don't want to pay 40. What if the market opens down, then I'll get a better price. So I'm going to put this at 25, and then I'll adjust, not $25, 25 cents. And then I'll adjust Monday when the market opens. Boom. All right, SoFi. Okay, coming to the end. I've got Tesla next. A lot of news on Tesla. Wow. Trump and Elon, are they going to make up? It's drama. It's like a soap opera. It's fun to watch. I did a video on it. Check it out. 310 to 340. And I think it is that video. Well, watch the video. It'll tell you. But 310 to 340. No, I don't have an iron condor. I've got a poor man's cover call, so a leaps, and then I sold a call against it. And again, $295 stock. So to buy that outright, 100 shares is $29,500 versus the leaps option is, less than a third that. But I love the setup with Tesla. Again, we've got a lot of stocks right now that are the 50s getting ready to cross that 200. So love Tesla. I got one more. Here it is. The trade desk. Look at the setup. Same. Love it. But we just got a leaps on because it was, I didn't, on it, a move up, then I'll throw on the call. So if we have a move up, the market opens up Monday, then I will go here. I'll go to the table mode. I'll go to July because I like to trade 30 to 45 days out on the short term in the regular options. So I'll sell. And right now I would probably, with these, I might sell 75 because I've still got $4 upside in the leaps and I can collect $300. So $300 and do that every month. That's huge. So then I review and send and place the trade. Be sure and download the free options workshop in the link below. Like and subscribe. If you like this video, be sure and watch this next video. Thanks for watching. I'll see you in the next one.